trading day today on Wednesday, August the 2nd, 2023. NASDAQ shorts were the highlight as the Fitch downgrade of U.S. long-term credit from AAA to AA plus. So the credit rating was AA, and you saw this overnight, and the overnight session was AA, and they downgraded it to AA plus, and that was all the news today. And the market sold off 2% in the NASDAQ. I would have thought it would have been a lot more than that. And the market continues to be much less bearish even on down days. But we had some nice short trades. Let's go over the market and the trades on the day. You can see the gap down. There's a gap down immediately in the overnight session as the market opened lower. Let's look at the 24-hour chart. And you can see right here, it gapped down right at the beginning of the session. There's an hour. This ends at 4 Central, 5 Eastern, and it opens up again at 5 Central, 6 Eastern, and it gapped down right away and tried to prop it up here at the open. Tried to prop it up here, run it back up here, and then it certainly tried to. This was the point where let's look at the longer-term chart. Let's go with 60-minute bars. I'm going to show you the short trades here in a minute on the strategy signals. And so there was this 15,500 that was trying to be supported, and so there was some effort here to hold those lows. There's some time spent right at this level. Then it broke through. Then it bounced back to try to support 15.5 on a closing basis. Then it broke through again, and then you can see on the 1-minute basis it tried it at 30 minutes before the close. It tried to rally again, went against our short trades, and now it's rolling over after the cash close. Here's 30 minutes before the close, a choppy rally, and now it's giving it back. Be interesting to see what happens in the days to follow. I thought that something like this would create a bigger move lower as the bond sold off, potential interest rates moving higher, and I felt for a long time that the market should trade lower, but the liquidity is pushing it higher. We've been on the long side mainly because the liquidity just pushes it higher, even though fundamentally it seems like it should go lower at some point. We'll have to see what happens with the fundamentals if those take over and the market moves lower. So we're in a seasonally weak time period, August, September, and we had this credit down rating, and so the market sold off today, and we had some nice shorts to take advantage of it. Here's the Russell, here is the S&P, and the ticks kind of sideways, not really that panicky except right at the open. Advanced decline line, low is minus 2,000. And the VIX was only at 16, so it's up 15%. That's a pretty significant move higher, but it's at a pretty low level, going from a 13 handle to a 16 handle. And so let's go over the trades on the day. These NASDAQ trades here are Cobra 3 plus 1,000. We still have this pattern in the market. You would think it shouldn't be there on a day like today. This pattern that we've talked about endlessly. Gap down, continue, and then prop up the rest of the day. It won't sell off in the afternoon. And on a day like today, every now and then, you can get a lot of market patterns that are against you, but 100% of the time, this doesn't have. You don't get this kind of pattern 100% of the time. But it seems like lately, this is the pattern 100% of the time. Every now and then, you're going to get one that continues into the close and is not as propped up. And so, the ones that go into the close really can be big winners and more than make up for these that just prop at the end of the day. But we're getting this kind of this broken mechanism where even on a day like today, there's a prop at the end of the day. And so we were still profitable though. So Cobra 3 got short, not huge. You can see how that works. It's peaking out right here, and then it won't trade below that low after 12 or so, 12:15 Eastern. And it chops around the rest of the day. And we had gap continuation plus 1270, tick pulse 1590, EVP1 was up 1370 on the day the first trade was profitable, trailing stop loss, got short again, stopped out. AT 2022 has been one that's really hasn't done that well, but we've kept it in because it's been unreasonably, it's a good strategy longer term, and unreasonable in the fact that it hasn't done better, and today it did, and so we may get more days like this. Tick count trend. Now this strategy, I only show these two trades on my VPS dedicated server. So sometimes you get data differences and sometimes the results are different. And so take count trend only had 2 trades on my dedicated server, and it did better on my, this is my platform. I have multiple TradeStation logins, and I have a dedicated server, remote dedicated server in New York, because that's where the TradeStation data servers are. But TradeStation has different data servers, and so sometimes the data is slightly different. And today I got this one on my desktop, and I did not get it in live trading. So I missed an extra profitable trade. Actually, I take that back. It was this one. This is the trade that I did not get on my dedicated server. So I missed a profitable trade on my dedicated on my live trading that does show up on my desktop server. So Mag 7 was down on the day, got short, and just got short in that time period where it just goes sideways and is propped up. Momentum reversal. Tried to catch that reversal. Sometimes that prop turns into a reversal. Today it played for that, but it went sideways, minus 85 on the day. S&P strategies, tick pulse plus 837.50, tick wave 1012.50, tick count trend dynamic turnaround minus 1337.50, gap continuation, and reverse 2023 plus 500. Not a lot of fall through on the day for those. For the live trading, I put in a round number from the platform. So this is plus 8,300. I usually round down and make it worse than what it is on the statement. For example, yesterday I said the results were minus 1325, and the results on the statement when I received those were minus 1283.71. And so I usually take the number in the platform, I round it down to a number that will be less than what's on the statement, and then readjust these numbers the following day. And so that is where we are on the day, up on the week. This puts us up on the month. We are adding up yesterday's. It's one of those, again, Monday is part of this week, but it was not part of this month. And so Monday was up about 2,300, and the results yesterday were down about 1,300. So month to date, we're up 7,000. Quarter to date, 25,500. And live year to date, I'm showing about plus 22.8%, so plus 22% roughly. And we are 1761 away from equity peaks on May the 5th. That's the end of day equity peak. We are at quarterly equity peaks though. And so we were beyond this intraday. We were well beyond this at the low intraday, and we gave back some of the gains in the middle of the day, the chop in the middle of the day, and so was close to overriding and taking profits, but the potential for a bigger day was there, so I didn't do that. The biggest day on this portfolio was plus 50K with some 20 and 30K days, and so I thought, at least wait for a 20K gain. Didn't get there, and so we wanted to position ourselves. You want to position yourself for big days, even if you give some back, because in the long run you end up making more if you just stay with it and you ride those winners and give it the best opportunity to make the most profits. And that's what we did today. And the hypothetical end of day drawdown on the model that we're trading, remember we're discussing hypotheticals versus live results. And the hypothetical results are at equity peak on the new model, while the live results, we are almost there, $1,800 away from our maximum equity peak, because we are trading a different model as of July the 10th than we were trading before July the 10th. And so we transitioned while we were in a drawdown. So the drawdown levels are different. And so I want to discuss, and also some of the reasons you can get different results in the E-minis versus the micros. This is the NASDAQ is data 1, the micro is data 2. This is a overshoot strategy that takes advantage of differences between the lows in the E-mini versus the micro, NQ versus the MNQ. So you can see here, data 1, like I said, NASDAQ, data 2, micro NASDAQ, and the plot at the bottom shows the spread difference between the lows. And so the low here is more than 4 points difference between these lows. And if you have a strategy that's, say it's short and its profit target hits the low of the day. Say the low is, say you were shorting this and the low of the day was right here, 15,650, and that was, say it was at 15,651, and that was where your profit target was, and your low of the day on the NASDAQ was 15,651, while your low on the day on the micro was 15,652, and it didn't hit. Actually, the low, here's the low, 15,650. The NASDAQ, the profit target is at 15,651, and it goes down to 15,651 on the NASDAQ, while the low on the day for the micro is 15,652, which is 2 points higher. You see down here, here's the 2-point line, and there are times when it's more than 2 points difference. And so the profit target is 15,651. It's hit on the NASDAQ, but it isn't hit on the micro. And then the market reverses and stops out your micro. So your NASDAQ strategy could be profitable, while your micro strategy might hit its stop loss on the same day with the same entry, because there's a small difference between the lows of the day or the highs of the day. Same thing, the micro could hit that profit target, the NASDAQ could not. It could be a stop loss issue. If you're long and the micro goes down and is 3 points lower, just enough to hit the stop loss, and then the NASDAQ doesn't hit its stop loss, it reverses and goes up and is profitable for the day, while the micro was stopped out. And so you can see those differences happen between micros and NASDAQs. And so the NASDAQ and the micros can be different for this reason, for data differences. It can also be for server differences. That the reason that you could have different results than I do is because the data servers, TradeStation has multiple, I think 4 data servers. And sometimes there's a difference in those servers that has, a tick or two difference. And most of the time that tick or two difference won't make a difference, but it's possible if it's at the extreme of a stop loss or a profit target. If your entry price is slightly different and your high and the low is the same, but your entry price is a 1/4 point difference, it could be the difference between hitting that stop loss or hitting that profit target on occasion. And so those are the 2 reasons why your micro results and your NASDAQ results could be different. It's really hard to manage it perfectly when you trade both those markets and compare results for both of those markets. And so that's what I wanted to share with you and explain. So these are the final trades on the day for Wednesday, August 2nd, 2023.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.